But it's been a good year for JLEN, a year that has seen its market cap grow by more than 10% to just under 610 million by year end. And this growth was sufficient for JLEN to gain admission to the FTSE Russell 250 in June this year, which is something we're clearly very proud about. Our net asset value has also grown, and the fund has provided shareholders with an annualised return of almost 7.5% since JLEN's IPO just over 6 years ago. Now, alongside the financial metrics is JLEN's contribution to the green economy, which is really intrinsic to the business. And the fund has generated over 900 gigawatt hours of renewable energy. It's diverted 450,000 tonnes of waste away from landfill, and it's also paid around £350,000 to the communities around our assets. It's also worth noting that the fund has received a number of awards for its contribution on ESG matters. During the year, JLEN has also been able to expand its portfolio to 30 renewable infrastructure assets across 5 different technology subsets, and that really has further diversified its holdings. And that diversification is a key theme for the fund, and it means that shareholders aren't exposed to just one dynamic, be that climatic conditions of wind, solar or rainfall, but also different market dynamics of different market movements, whether that's power prices or commodities. And this diversity has also allowed the fund to build resilience into its portfolio, something which is clearly very important at this stage. It's also been a year where reduced prices for power has affected the industry as a whole, and JLEN is no different in that. But it does have one of the lowest exposures to wholesale power prices with its portfolio, and so it's well placed to manage this current position and move forward from that. It's also worth noting that in this year under review, it's almost been 12 months since the advisory team to JLEN moved to Foresight, and during that time we've been able to enhance the service provided to the fund in areas such as asset management, new deal origination, and also the confidence to invest into new geographies.
JLEN has announced that it's moving to a progressive dividend policy from the period after this current financial year. The reason for this is to ensure that the dividend is sustainable over the long term. JLEN is a long-term investment and has been affected by lower power prices. It's certainly true that the majority of JLEN's revenues are linked to inflation through green benefits and also contractual payments, but the outlook for power prices is for them to remain low for a period of time, and this change in the dividend policy gives us the flexibility to ensure that the dividend remains sustainable over the long term. It's worth remembering that JLEN has paid over 120 million to investors since its inception, and we look forward to paying more dividends over the years to come.
Well, I think it's fair to say that there's renewed optimism across economies that investment into renewable energy and environmental infrastructure will increase. Many countries have set out clear targets to decarbonise their economies. The UK has its net zero by 2050 target, of course, and we would expect to see new opportunities to invest as a result of all of this. And these are likely to arise in a number of different sectors, be it renewable energy generation or decarbonising transport, or even energy efficiency. And JLEN's broad mandate allows it to capture these opportunities and really further diversify the portfolio. Indeed, we can see European investment opportunities becoming a much stronger part of that pipeline as well. This year, the board has also developed a number of ESG objectives, which really does underline its commitment to this important aspect of its activities. And during the course of this coming year, a number of key performance indicators will be developed to support these and really underline that aspect.